Hello and welcome to Wake Up and Smell the Mic S&P 500 review for Monday, February 28th, 2022. It's now Saturday the 26th, about 9:52 a.m. Central Time. We start off in the S&P 500 daily chart in DeMark to see that a combo and sequential sell setup one count has been printed. And to negate that for today, there must be a close under 4304.76. The propulsion momentum up is qualified and confirmed, and it came very close to closing above the 50% qualified exhaustion up at 4385.90. And the close was 4384.65. I'm calling it close enough to hold on to what I have went long on down here near the trend factor down 4, because it did go above it a little bit right before the close, and then it just came back down a couple points, so I held on to that. The McClellan breadth oscillator in the NYSE did make it above 0. We'll take a look at that later, and there was a lower low of 4116.06 back on the 24th here, a couple days ago. And the D-Wave C5 and B2 are locked in. And even though there have been more qualified and confirmed momentum up than down, you can see there was one over here on the 8th, and now we have this one, and there have not been any momentum downs recently that were qualified and confirmed. However, the disqualified momentum down at 4446.37 is above where the qualified and confirmed momentum up is at 4250.98, and that's a bad sign, and we're due for more downdraft. It just depends on where one thinks it will stop and start heading back down again. So we'll have to see what happens Monday, get above this 4385.90, 50%, and might hang on a little while longer to see what happens at the momentum down. Or price could make it up to the disqualified by TDST at 4525.60. That would be the short-term goal to the upside. If it can make it past this 50% and stay above 0 in the McClellan oscillator, which we will see soon. And in the S&P 500 weekly chart, there is a qualified momentum up here from last week's bar of the 22nd. There was an up close on the 7th, followed by a down close for the week of the 14th. And we had the close above the momentum up for last week of February 22nd. So that makes this 50% qualified and confirmed exhaustion up at 4385.90, which is shared in the daily and the weekly, all the more important. And that will be a tough one to confirm, as it would need to, of course, open higher than the close of this week here on the 22nd, 4384.65, and then tick higher than this bar of the qualifying process on the week of February 7th. The high was 4590.03, so it would have to tick higher than that and then stay above this close here at 4384.65 at the end of week Friday. And the resiliency of the market never ceases to amaze me, but I am highly skeptical of that happening. So we'll just stick to the goals on the daily chart, and that weekly qualified and confirmed possibility. That bar is near the relative retracement up to, which it's already slammed into 3 times, so it could happen again. but it would be a major move just to get above the buy TDST at 4525.60. However, if that becomes qualified and confirmed, then I would say that there's a good chance at hitting that 4600 level again. The NASDAQ composite overbought oversold chart shows us that we are in big trouble here still, with the ratio adjusted summation index of the NASDAQ composite itself still around negative 1000 and headed down. The McClellan oscillator for breadth of the NASDAQ composite is right above zero, similar to the NYSE, which we'll see after this. The FANG summation index ratio adjusted for the McClellan breadth oscillator is below zero here too, and the FANG McClellan oscillator for breadth is above zero too. And the overbought, oversold oscillator shows another big bounce from a big extreme oversold indication here. So back above zero for the 5 EMA. The 30 EMA in solid green is right behind it. And the 10 simple moving average in dotted red is following close behind to get out of that oversold zone, headed right back up to overbought zone. The FANG VIX or FIX took a nice leg down to 31.19, and the McClellan volume oscillator for the NASDAQ composite index made it above zero slightly, 3.47. And the FANG McClellan volume oscillator made it up a little more than the composite, 22.79. The NYA top collar chart, we'll look at the NYA to SPX ratio, the NYAD, the McClellan oscillator for breadth, and price. I will zoom in now. First up, the NYA to SPX ratio. We can see that the uptrend line was broken a bit the other day, and it's trying to get back above it, so value is trying to outdo growth again, and I'm sure it will. The NYAD is in really sad shape. It's headed down in a downward trend and way below its 200 period simple moving average up here, and then the green one is the 50 EMA, so the 50 EMA is below the 200 simple, and the AD line is well below both and in a downward trajectory. Here's the McClellan breadth oscillator, and you can see it looks like the other ones in the NASDAQ chart. It's above zero a little bit, so let's see what happens today, Monday. And if it goes below the zero line again, that's bad news. The head and shoulders topping pattern has completed, and we had a move down below the neckline and then a pullback above it, got back above the uptrend line from the COVID crash. It's fast approaching the middle of the road line here for support and resistance in pink, and I've moved the bar for negating the head and shoulders pattern from the left shoulder and head to just a horizontal line above the right shoulder, so that's the target to get above and negate this head and shoulders pattern. And the left shoulder is larger time-wise than the right shoulder, and in height also, so that's a pattern that has a better chance of breaking the neckline and moving under it than continuing above it to break the head and shoulders pattern. The McClellan volume oscillator is below zero. It did not make it above zero. The ratio adjusted summation index of the McClellan breath oscillator is below negative 500 and headed down, very ominous sign. And the volume ratio adjusted summation index of the volume McClellan oscillator is moving down further. You can see over here at negative 360.86, lower than the previous several days. RSI did have a pop along with price and is above its signal line and right below the 50 line. And on balance, volume had just as big a down move for the last few weeks as it had an up move these few weeks back here, starting in the end of January. The stocks only AD line nailed its downtrend line in red, and that coincided with the uptrend line from the COVID crash, and I was able to make the uptrend line from the COVID crash solid with this hit here. It's trying to get back to its signal line, but that's quite a distance between each other there. And the McClellan breath oscillator for the stocks only AD line is above zero a little bit too, like all the other breath oscillators. And the intermediate term volume oscillator looks like it's trying to pull back on the stick a little bit here. That's quite a move down. It turned around right below zero and headed down. It's still below its signal line. The breath oscillator is the same. It's below its signal line and trying to pull back on the stick and head back up. And the instruments above their 200 period moving average in the NYA is trying to get back to the 40 to 50 zone, and it's at 38.90% of instruments in the NYA below their 200 period moving average. The NYA weekly rising wedge chart, I'll zoom in now. Price is desperately trying to stay above the rising broadening wedge bottom line here. So it looks like it's right on that line and still below its 200 simple moving average, or the 40 period simple moving average here in the weekly chart. And we'll take a look at the monthly NYA chart. You can see price up here. Looks like that broadening rising wedge pattern. Here's the long-term KST. You can see it's still above its breakout line here in green. Looks like it's still trying to roll over, but it's just in the beginning of that process. And the Kopic curve is trying to stay above its breakout line in green here. And the PPO looks like it dipped its toe below the water here, its breakout line in here in green. The CBOE total put call ratio chart shows that the bullish trajectory downwards is continuing, although rather tentatively, but nonetheless headed down. As long as it stays away from its signal line here in red, it will be in good shape. The S&P 500 support and resistance big board shows the daily and weekly 50% propulsion exhaustion up, qualified and confirmed as the gray area, and there really is nothing above that in the 4300 zone. So next up is the top of the weekly rising diamond extension, 4504, 200 EMA 4405.80, weekly pennant breakout extension 4402. Then the R1 at 4417.72. To the downside is the disqualified sell TDST 4363.80, top of range 2, 4369.23, and a close below the disqualified sell TDST at 4363.80 for today, Monday, will give us a qualifying bar for today. And the S&P 500 has been in enough trouble lately to the downside that two closes above 44.97 with the second close above the breakout bar close, and I will call the bottom as being in. Have a great day.